What's going on, guys? So in this video I'm going to show you guys the number one lie you've heard about money. And of course, school didn't teach you guys, because if they would have taught you guys, they couldn't necessarily profit off of you. And what that lie is that banks don't want to lend to you. They practically go ahead and print money at this point. And I'm going to explain to you exactly how you guys can be able to get your fair share, especially by utilizing your credit and also your business credit in order to be able to do so. So without further ado, let's get into this video. So for years, people have been telling you that banks only lend to a certain amount of people. They probably have a lot of cash in the bank. They have really great credit scores. And also you need to be able to have built out a credit score for about 30 to 40 years. So most of these laws are really perpetuated by people that necessarily don't even know what they're talking about. So how actually it works, right, as far as banking, is banks actually want to be able to lend to you money. They actually make more money when they go ahead and lend to you money. So whenever you're getting approved for a credit card, banks can be able to actually lend out 9 times more for every dollar that they lend out. So every time they give you $1, they can go ahead and actually lend out to somebody else 9 more times. And that's how they actually make more money, because people think it's about interest as far as how the banks make money, but it's much more levels to that. So it's really more about the fact that banks are able to lend you guys money so they can lend more people money. So they can actually be able to get their return on investment via interest that they're charging every single client and every single person that actually borrows the money. So that's why I see when people are like, oh, I don't want to go to the bank, like they're going to go ahead and straight deny me. You have to understand that most of the times, whenever you're going to the bank, they'll figure out a way for you guys to be able to get approved, whether that's a secure card or whether that's being able to give you a credit card with the lower limit. So the whole reason I started the channel, right, was to be able to show people that as long as you guys have your ducks in a row, you can be able to go ahead and get approved for 50,000, 100,000, as much as you would like, to be honest. It just takes time for you also to be able to know that you need to have patience with it. So in the last couple of years, you might have been noticing it's a lot easier for you guys to get approved, especially with the new election year. You're going to see a lot more intake as far as banks being able to go ahead and lend out more money. So one thing is, right, is that banks will often lend to younger people. I've literally seen people that are 20 years old get approved for a 45K credit card just off the bat. And that's because of the fact that they understand that actually lending out money is going to make them more money. It's been around for so long, so many people don't even realize it. But for the most part, what you guys really need to be able to have in order to be able to understand how to actually get this in position is just to be able to understand your credit. So I'll talk a little bit about as far as why banks actually go ahead and lend, and also the benefits of you guys being able to get approved. Let's talk about 2 main ways that they actually make money off of lending you guys money. So the first one is going to be compound interest. The longer it takes for you guys to go ahead and actually pay off a loan, the more money the bank ends up making by being able to charge you guys interest year in and year out. So that way they'll be able to literally go ahead and start to compile a lot of their different interests and also make way more money off of you guys in the long run. So if you understand about a mortgage or just lending in general, if you look at the amortization schedule, you'll see that a lot of the interest is going to be charged up front, and then as the loan proceeds, they'll start to charge lower interest and then have more of the principal balance on there. So if you guys look at your actual loan, and so what that means, right, with the beginning of your loan, you're basically just going ahead and paying the bank's interest so they can make sure they get paid on the front end. And later on, as that loan continues, the ratio will be a little bit more in your favor as far as paying off the principal. So the principal is the actual loan balance without any type of actual interest on there. And so the second way that banks actually make money is by customer loyalty, right? So the second way that banks really make money is by having customer loyalty. So they know if you get a product such as a credit card with them, whenever you guys go ahead and think about getting an auto loan or getting a mortgage, you're more than likely going to go to the same bank in order to be able to get approved. And their approval rates are going to be a lot less compared to if you newly started with the bank. That's because banking is an industry which is very relationship oriented, right? So they want to be able to establish more relationships with you. The easier it's going to be for you guys to be able to get approved for high limits and also being able to get approved for practically any type of product. So they know once they get you in the door, you're more than likely not going to go ahead and just switch up on them. That's why banks really pride on having really great customer loyalty and just to make sure you never leave. All right, so we talked a little bit about as far as the banks going ahead and lending you guys money and how they actually want to go ahead and lend you money. So with that being said, you might be asking yourself, you're like, Abu, so how can I use this in my favor? So that's a great question, because if the banks are going to go ahead and lend you guys money regardless, why don't you go ahead and just leverage that so you guys can be able to build out the lifestyle that you want, instead of you just being a regular consumer and you using it for Starbucks, designer, and stuff that's really not making you any money. So what you can be able to do to make this turn into your favor is literally to be able to use it for your own benefit rather than for consumerism or just to be another type of product to the bank. So how you can be able to do this, right, is by going ahead and get approved for high limits, making sure that you have your credit profile is intact. So I don't want to see any type of negative items. Like, So I want you to treat your credit report like your health, because so it's literally like your adult report card, and it shows lenders that how well you've been able to be a good steward of money and how you've been able to manage your actual money. So by making sure you guys always have your credit profile intact, that way when you guys find out about a new bank that's giving out a really good promotion, you can be able to take advantage of it right away. And the last thing is to literally go ahead and invest into assets, not liabilities. Guys, you have to understand this. If you go ahead and invest and just be patient into assets, you can literally buy any liability that you want. Like honestly, like I've done that where you spend a lot of money on designer. I've done that where you spend a lot of money on cars. It's not worth it whatsoever. You might as well go ahead and invest into assets and then be able to go ahead and reap for that cash flow, because once you start getting cash flow right, then you can be able to go ahead and start spending liabilities. It's a different way of thinking. Like I know a lot of people, especially on my channel, they might go ahead and want a G-Wagon, right? But most people think about how much a G-Wagon is to afford. So they'll go ahead and look up the monthly payments. They'll see that's about $3,000. I could definitely be able to scrap and scratch for about $3,000 a month. Most people don't think about how you can be able to buy you an investment property or buy you a business so that they can be able to actually make $3,000 or more. So instead of you actually coming out of pocket for that, you can literally be able to buy 2 of those cars, rent one out. So while that one's on the road making money, you could be driving yours for free practically. So it's definitely a different type of thinking that you guys just have to really understand. So investing into assets does not mean no to your liabilities. It just means that you have to wait a little bit longer and you're doing it just a little bit smarter. So I highly encourage for you guys to be able to flip that switch and also flip that mindset as well. So the bottom line, guys, is that banks are going to go ahead and keep lending out money, especially in a country like America where it's very wrapped up around consumerism. They're going to keep approving people for high limit credit cards, 5,000, 10,000, whatever they want. But at the same time, you have to understand that instead of you playing into their hands, use it for your own benefit and also your family's benefit. So then you can be able to literally leverage your credit to be able to get that lifestyle that you want. So you can be the producer instead of the consumer. And for the most part, that's going to be it for this video. If you guys have found this video helpful, please go ahead and subscribe. Get your boys at 10K subscribers. Your boys on the road to 10K. So I'd really appreciate it. And like always, I'll see you at the top, right, boy? Let's get it.